Okay, let's dive right into this. Welcome to today's Explainer, where we're breaking down an absolutely massive, landscape-altering shift in the Indian pharmaceutical industry. Every once in a while, a transaction comes along that literally redraws the map, and we've got one of those today. We are looking at ChrysCapital's major acquisition of Novartis India Limited. We're going to unpack the entire strategy, the legacy brands that are honestly probably sitting in your own medicine cabinet right now, and exactly what this all means for the future of healthcare access across India. So, let's kick things off with Section 1, a landmark pharma deal. Now, what's really interesting about this slide is the sheer scale of the transaction. ChrysCapital hasn't just bought a tiny slice of the pie or a seat at the table. They've acquired a commanding 70.68% controlling stake in the BSE-listed Novartis India Limited. In the corporate world, this isn't just an investment, it's grabbing the steering wheel. They're taking absolute, total control of the company's direction, leaving just under 30% to other shareholders. It's a massive statement of intent that completely changes the operational reality for this entire entity. And here's the kicker. This is ChrysCapital's inaugural, majority-controlled investment in India's pharmaceutical sector. For a major Indian private equity firm to make its first majority pharma play at this scale, well, it tells us two things for sure. One, they see incredible, largely untapped value in this specific company. And two, they're ready to roll up their sleeves and actively operate a major pharmaceutical platform rather than just passively backing one. They are officially moving from the passenger seat straight into the driver's seat. Let's move to and see how this builds in Section 2, Meet the Key Players. So, exactly who is involved in this monumental transfer of ownership? On one side, we have the seller, Novartis AG, the global Swiss pharmaceutical giant, basically carving out its controlling interest in this specific Indian unit. And on the other, the buyer, ChrysCapital, a real heavyweight Indian private equity firm. We're watching a fascinating shift here, from global multinational stewardship to aggressive, highly localized private equity backing. It's a strategic pivot that shifts the operational focus squarely onto domestic growth and targeted expansion right within India's borders. Moving right along to Section 3, the branded generics strategy. So, ChrysCapital's stated master plan here is to build a leading, highly competitive platform focused specifically on branded generics for the Indian market. Now, if you're not super familiar with the term, branded generics are essentially off-patent medications, meaning the original exclusivity period for the drug has ended. But instead of being sold just under a generic chemical name, they are sold under a specific, recognizable brand name. In a market like India, this is absolutely crucial. A brand name signifies quality, reliability, and consistency to both doctors and patients. ChrysCapital isn't just buying chemical formulas, they're buying decades of established market trust. And this whole strategy, it's deeply rooted in ChrysCapital's absolute confidence in India's long-term pharmaceutical growth potential. I mean, they aren't starting from scratch here. The firm plans to leverage its extensive healthcare investment experience and deep sector network to really supercharge this company's next phase of expansion. They're looking at a rapidly growing middle class, an increasing baseline of healthcare awareness, and a rising demand for high-quality, trusted medications. And they're positioning this newly acquired platform right in the dead center of all that demand. Okay, let's get into the actual physical assets in Section 4, legacy brands and products. Novartis India Limited brings decades of presence across highly critical therapeutic segments. We're talking about deep, incredibly established market penetration in everyday areas like pain management, calcium supplementation, and gynecology. But it goes further than that. They also have significant footholds in highly specialized, complex fields like neurosciences and transplant immunology. These aren't new, unproven markets. These are established battlegrounds where this company has fought and successfully won market share over many, many years. So, the crucial point is, you likely already know this company, even if you didn't quite realize it. Think about it. Voveran for pain relief, calcium Sandoz for bone health, which, let's be real, has probably been sitting on a shelf in your family's home at some point, right? And Tegrital for neuroscientists. These are literal household names in India. They're trusted by thousands of physicians and used by millions of patients. These are absolute gems of brand equity that would take decades and billions of rupees to build from scratch today. Let's see what happens next in our final chapter, Section 5, New Leadership and Identity. Now, because they are officially separating from Novartis AG, they actually can't use the Novartis moniker anymore, so the company is set to unveil a completely fresh name and corporate identity. This is a massive rebranding effort. They're taking all that historical trust we just explored and transferring it over to a brand new banner. It's essentially a rebirth that signals a more agile, locally focused entity, ready to carve out its own distinct space in the market. And to steer this massive transition into its next phase, Vikas Gupta is stepping in as the new CEO and managing director. Plus, to ensure ironclad corporate governance under this new private equity ownership, they've brought in a slate of heavy-hitting independent directors, Ramesh Ramadurai, Sachita Sharma, and Shashank Sinha. This is the brain trust tasked with turning a former multinational subsidiary into a standalone, high-growth engine. The confidence from the top is, well, it's pretty palpable. Kshitij Seth, the managing director at ChrysCapital Advisors, praised the new leadership team. He noted that when combined with NIL's legacy brands and market standing, ChrysCapital believes the foundation for long-term value creation is firmly in place. It's really the perfect marriage of historical assets and aggressive new management. And the new CEO, Vikas Gupta, clearly understands the gravity of this transition. He stated that they aim to carry forward decades of scientific rigor and physician trust, using ChrysCapital's backing to grow the portfolio with purpose and reach even more patients. He's basically assuring the market, right? The rigorous science isn't going anywhere, but the scale and speed of growth are about to get a major upgrade. So that leaves us with one big question. With a completely fresh identity, aggressive new leadership, and the incredibly deep pockets of ChrysCapital, how exactly will this newly independent entity reshape patient access in India's branded generics market? I mean, they have the trusted drugs, they have the capital, and they have the independence. The foundation is set. Now let's see how high they can build. Thanks so much for joining me for this explainer. Keep your eyes on this space, because the Indian pharma landscape is shifting fast, and it is fascinating to watch.